What would a trade war do to the US dollar? By www.profitableinvestingtips.com. The off-again, on-again US-China trade war drives stocks up and down. But what would a trade war do to the US dollar? And remember that Trump just increased tariffs on steel and aluminum from Canada, Mexico, and the European Union. So a trade war would not be just with China, but the rest of North America and Europe as well. Market Watch offers a little insight on why it makes sense to bet against the dollar. Trump is upset about trade deficits, but the nation with the world's reserve currency, almost by definition, runs in the red, said Muir, a market strategist at Toronto-based East West Investment Management. Therefore, if Trump is insistent on eliminating all of America's trade deficits through protectionist trade policies, he is hastening the abandonment of the U.S. greenback as the world's reserve currency. This will mean a lower level for the U.S. dollar, he added. The Chinese would like nothing better than to see the yuan as a reserve currency gain strength and status against the U.S. dollar. As China advances economically and politically, it also wants to see its currency, the yuan, as a reserve currency. The first step for the yuan as a reserve currency came in 2016 when the International Monetary Fund included the RMB in the special drawing right basket of currencies. Now, central banks in Europe are following through by adding yuan to their reserves. The dollar as the primary reserve currency has stabilized the monetary system and helped the USA. But what would a trade war do to the US dollar? If Europe trades with China or Canada trades with Mexico, why would they want to use the dollar as a means of trade? China already prices and buys oil from Saudi Arabia in yuan. The eventual result of a prolonged and devastating trade war could be the pricing of commodities like oil, gold, wheat, corn, and others in currencies other than the greenback. This fact would also weaken the US dollar over the long run and perhaps permanently. Is a weak dollar just what Trump wants? We recently wrote about the story behind the weakening dollar. The dollar fell 10% last year and is headed downward again this year. The story behind the weakening dollar is one of supply and demand. Repeated budget deficits and an increasing budget means the government needs to borrow more and more money, print greenbacks at an ever-increasing rate. The oversupply of our currency is the story behind the weakening dollar. The individual factors are increasing private debt, more government spending and debt, and a negative balance of trade. Until such time as these are changed for the better, the dollar will continue to fall. And Trump Treasury Secretary has said a weak dollar would be a good thing because it would make U.S. exports more competitive. Trump and his secretary may get their wish if trade negotiations break down and a trade war ensues. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.